It's been quite a while since I've made my last live stream. I've been trying to do it on a weekly basis, but there are certain periods in which, unfortunately, I need to do it more on a bi-weekly basis. So I hope that you forgive me about it, and I hope that you still manage to catch up to my videos and hopefully enjoy the content. And um, yeah, that's about it. So guys, let's start. If you do enjoy the content, as you know, please drop that like and subscribe. That's the only thing that I ask. Don't sell you anything, don't plan to sell you anything. Just here broadcasting my opinion and my journey into what I hope to be financial independence. And well, the blue sky scenario would be for me generational wealth. Let's see if I can get there. So right now I would like to mention a few things going on with the markets, with the world. So a bit more of a macro view. We all know about the conflicts going around. Unfortunate. I mean, these are, to be honest, quite dangerous and quite abrupt times that we are living. However, I would say the second one has had less impact than the first one. I would assume also because unfortunately it's kind of a recurrent conflict, right? From time to time, we see this. What are we seeing right now? Which is expectable. Oil prices showing some strength. We still didn't get a new high after that $95 or so in crude oil, because the trend for oil was actually quite negative. Gold is also behaving a bit as a crisis metal, as it tends to do, and I mean it's basically behaving stronger than expected. So we did sell down to basically the 200-week average, which was about 1815 or so, and we should have bounced from that as we did. But I do think the extra strength that we are seeing is more related to what's happening and the events that are happening across the world. Now, what we are seeing on stocks is actually quite obvious, which is they've been very volatile, moving on a sideways pattern. Nobody wants to say it because everybody wants to come, oh my god, this is going to happen and this is going to crash and this is going to rally. No, I mean, it's just moving on a sideways movement. I think it's trying to assess really the impact of this conflict going forward. And what I think is going to happen is most likely we're going to keep on this sideways movement. We should be actually moving higher if things go well. If things go a bit according to the plan, to the patterns, we should actually be going sideways to up. But with a conflict like this going on in the world, anything can happen. So this is something. This is why stocks move so volatile as well, is because when you have too much uncertainty, that's what the market hates. It's not so much negative or positive news, it's the level of uncertainty. Now, what has been really bad has been the bond market. As I mentioned, I know I've said this many times before, but it bears repeating. The bond market dictates what happens in the other markets. It can take a week, 2 weeks, couple of days, whatever the case may be. You will not see other markets jumping up like crazy. Oh, by the way, welcome Goldfish628. Thank you for joining. By the way, guys, sorry, I forgot to say this. If you join in, when you join, please consider dropping that like and subscribe. If you have a few questions for me, try to write them down and I will answer as best as I can. Now, I mentioned this a few times. The bond market will dictate the rest of the market. I do think there are too many factors against bonds going in the same direction. Treasury with budget and trade deficits requires issuance of debt. So that's one seller right there. Then you have the Federal Reserve tightening and doing QT. So that's another seller. And then you have allies and enemies alike trying to de-dollarize and buy less debt. And then you see Biden promising billions of military aid. Question is, where all does this money come from? It's very simple. It comes from debt. So if things are left alone, rates have no limit in terms of going up. Because the more debt we add into the system, the more interest rates will try to be pushed up. I mean, it's really there's no big conspiracy around it. It's really that simple. If you're a person and you're getting into more and more debt, then you'll quickly realize that when you try to get funding, it will go, your interest rate will spike. Same thing with governments. There's no difference unless we have someone to come, let's call it the Federal Reserve, to come in and buy it. And pivoting to the Federal Reserve, you may have seen that Jay Powell is going to make a speech on Thursday, which, let's see what he says. It's more important to pay attention on how he says certain things rather than what he's actually saying. Look, he comes with a little paper, he reads whatever is written there, whatever he's told, he does what the market expects, but he leaves little hints. So, for example, he used to have these huge speeches for like 1 hour, but he used to reference getting out of the money printing game, a bit better written than what I said, but around that, and things like normalizing interest rates for longer periods of time to begin a new cycle. So what he was trying to do is to keep rates higher for longer. That's why I was talking about it in June, and all these economists were saying, oh, no, by October we'll be rate cutting. I said, no, we won't, unless something really bad is happening, we won't. And then now they are all in agreement. So the same economists are all in agreement that there's no rate cuts coming, there's no recession coming, blah, blah, blah. So now is when I'm starting to get, number one, concerned about a recession, because all of them agree that there's not going to be any recession. And number two, because if they all agree that there's not going to be any rate cuts, now it's the time to think that we're actually going to have rate cuts. So you see, it's always the opposite of what these guys say that matters the most to me. That's why they are always wrong. And if you don't follow the crowd, you tend to be on the right side of the event. Now, by the way, guys, if you do have a few questions for me, as you know, just drop those in the chat. I'll try to have a look at it. And don't forget that like and subscribe is very helpful for me. So thank you very much. Now, do I still think we're going to see new all-time highs by end of Q1 2024? At the moment, yes. On the, I would say probably S&P, Nasdaq 100, and Dow Jones seems very likely to me. Russell 2000, I'm really not that sure. Oh, I see Arturo. How close do you think we are from rate cuts? So I mentioned the following. The Fed would like to have higher rates for longer. However, and this is the stupid part, they always say, oh, we don't talk about fiscal policy, right? You've heard this before. That's stupid, because if the fiscal side keeps on going into huge deficits, they will need to borrow money. So the only way to keep the system stable is somebody will need to buy that debt. And who that person will be, of course, is the Federal Reserve, because they are the only people idiots enough to buy government bonds. So I was thinking that we're going to see rate cuts in Q2 2024. So somewhere between April and June of next year. Now, because all the economists are in agreement that there's not going to be any rate cuts, then I think it's going to be sooner, probably February or March. But what I think is going to happen is, number one, the Fed will start discussing the possibility of a higher inflation target. So instead of the 2%, I get the feeling that we're going to move to 3%. Maybe 4% eventually, but at least 3%. The reason is actually quite simple. In 150 years or so, we had like 8 years below 2%. I mean, 2% is not normal. I mean, I don't know. It's like people use this recency bias. You see, they just see something happen in the last 5 or 10 years, so they think that, oh yeah, the entire history is like that. No, it's not like that. It's actually quite the opposite. So I think what's going to happen is they will first come up with, start talking about a higher inflation target, maybe 3%. And they will call it in line with historical, blah, blah, blah. And then what they're going to do is they will come up, I think, with a fancy name for a new program. So they won't call it outright QE rate cuts. They will call it Operation Freedom, Operation Anti-Terror, Operation the West, Operation what. It's going to be something like this. Okay, the idea is to convince people that it's okay to cut rates and print money. And here is the funny part. I actually think if they do cut rates, in the short term, that is deflationary and not inflationary. Let me explain why. So, I hear from other experts that historically, okay, let's see, Maxcar, thank you for the comment. I hear from other experts that historically when Fed first starts cutting rates, it is negative for equities. Will this time be different? Yeah, so what happens is when the Fed actually starts to cut rates, the very short term after it, stocks actually go down. In the short time, talking about within 3 weeks to month and a half. It varies amongst cases. Why? So everybody wants the rate cuts. So people buy the rumor, and when the rates actually get cut, they sell the news. But then, as money is coming into the system, actually stocks go up eventually after that. Now they don't go. It's a little bit like you see when there's a big crash, like 2020, 2008, etc. Gold crashes with it for the first 30 days. Why? Because people sell what they can. They don't sell what they want, they sell everything they can. So when they're selling, for the first 30 days, everything goes down. And then you start to see certain things recover faster, like gold did in 2011 and then into 2021. Then you see, for example, the last time the Fed cut rates to zero, stocks went down like 10% on that day. But then that marked the bottom, basically, and then we went straight up. So basically, I think they cut the last time in April of 2020, and I think it was April. And then by, I don't know, 10, 15 of May, we start ramping up. And the reason is actually quite simple. If you look at the correlation between money supply, M2, and the S&P 500, is something like 99%. And the reason is actually quite simple, if you think about it. So interest rate is a cost for a company, okay? So if you increase the cost, what happens is the companies that can do it pass that cost increase to the consumer, to people like you and me. So basically, when you reduce the rates, that's a cost for the company that goes down. People think, oh yeah, by cutting rates, you facilitate lending, so money gets into the system, and that creates inflation, right? This is the argument. But there's a reason why Japan has been doing this for 30 years without inflation. And there's a reason why the US and Europe did it for the last 14, 15 years, and there was no inflation. Because people coming out of 2008 were already heavily indebted. So that means that a person who has a terrible credit... Hello everyone, if you could let me know if you're seeing me, if you can see me well, let me know, because I'm getting a bit notifications that certain things are not doing, that my internet connection may not be great. Yeah, guys, let me know if things get better. Sorry for this. So, as I was saying, if rates drop in Q2 2024, so I do think we're going to see a big run up into the Bitcoin halving. I think probably Bitcoin will, I would expect to approach at least 42,000. Now, $42,000 is a very important number, because at 42,000, pretty much the majority of people get in the green with Bitcoin. I think the average cost out there is something like 38 to 40K. So at 42K, pretty much everybody is in the green. Now, what usually happens is you have a run up until the Bitcoin halving, you have a drop after the halving, and then a couple of months later, you start the official bull market. And we have seen in the past that this pattern has repeated several times. I see little reason why it shouldn't repeat again. Actually, if you look at the cycles, if you look at 2015, 2019, 2023, if you take out the dates and you take out the price, of course, because you would see different prices for Bitcoin, the cycle is pretty much identical, so it's very little difference. So I do think that June 2024, we can start the bull market more on a full-fledged basis. What else? Rate cuts, of course, they would help. I mean, it's not great for everyday people, because basically you guarantee that they cannot buy ownership in stocks and real estate, which already unaffordable. Real estate is at its most unaffordable levels, since something like you would need to go back about 45 years or so to see something this drastic. But this is what ends up happening. That's what I'm saying. Like everyone is convinced that the Fed, by raising rates, will stop inflation or whatever. But actually, no. Why? Why did we have this spike in inflation? This part is very important. Because for the first time, the government gave money to everyday people, tell them, go spend your money, but don't produce anything, stay home. By the way, we're going to also shut down all the other countries, and then we're going to break out supply chains, and then we need to restart the whole system. And by the way, the money that the Fed printed was something like 45% of the American GDP. I mean, a brutal amount, right? And we still got, even, 9% CPI was the peak, but even if you say, okay, yeah, but the CPI is rigged, I get it. Maybe it was 18%, fine. But still, after all of that, like, you're giving literally money to people. I knew people that were making more money with the stimulus checks than from their job. I mean, this is the amount of money they were making. So even in that scenario, you created that level of inflation, right? So I actually think if you would drop rates, you would probably see lower inflation, because it's a lower cost for companies that they no longer need to pass it on to their consumers. So this is why, for example, people like Peter Schiff are completely wrong, like thinking that by cutting rates and printing money, we have immediate, very high inflation. Just look at Japan. Japan has been doing it since 1990, and they don't have very high inflation. What ends up happening is your productivity goes down and your growth goes down, and you get to a point where half the people cannot have children because they go bankrupt. That is the price you pay. I mean, you really don't have a situation like the Great Depression, with 25% unemployment, people on the streets. But no, I understood, Matt. I understood that you're talking about the crypto bull market. I was referring to that as well. So what I think is going to happen is something like this. I think October, we're going to still move a bit sideways, maybe a bit up. I think by end of the year, we should see a bit of a pump on Bitcoin. I don't think we're going to see 60,000 Bitcoin. Like, I've seen people, 60,000 Bitcoin. I don't think so. I mean, maybe I'm completely wrong, but I don't think so. I think we're going to probably go to 35,000 or so by December. Then the key number will be write this number down, my opinion. So please don't take this as financial advice. This is really just my opinion. I mean, I'm a guy with a mask. Like, what do I know, right? I think it's going to be at 42,000. The reason I just mentioned is because the average cost out there for Bitcoin, for the general, I mean, say, oh, but I know someone who's 50,000. Look, sure. What I'm saying is the average for everybody that owns Bitcoin is about 40K. So the question is going to be, what's going to happen at 42K, right? So that to me is going to be the number to watch. What I think is going to happen is you're going to see some run up beginning of the year. You're going to see sell off in. Then I think we're going to see a sell off after the halving, because it's a buy the rumor, sell the news event. Then probably 2 months. I think we're going to see big correction, maybe 25% or so, 30%, 25, 20, around that. Then we're going to see some sideways movement, and then I do think about a couple of months later we start the bull market. I think we're going to see new all-time highs in Bitcoin, my opinion, probably by Q4 2024. I don't think we're going to see sorry, I'm just reading here, Arturo. So we could potentially have a run up to new all-time highs right before the halving. Then Fed would cut rates, short cycle bottom. Then the halving could give us the melt up. No, I don't think so. I don't think we're gonna see new all-time highs before the halving. So to be clear, I do not think we're gonna see new all-time highs before the halving. I don't think so. I think we're going to see something like by the halving, maybe 40, 45K. I think we're going to see correction after the halving. And then around July or so, we start moving up again. And then I do think we're going to see Q4 2024 very strong, and Q1 2025 very, very strong. Then when we fall out of the parabola of Bitcoin, when Bitcoin goes like this, and then we fall too much outside the parabola, we start selling off, and then the bull market is over. What can change this? So the question is, this is what I expect. What can change? The entrance of Bitcoin spot ETFs. The BlackRock one, but you also have iShares, Fidelity, you have Grayscale Bitcoin Trust converting into an ETF. This will be, in my opinion, a big deal. Why? Because now let's cut the philosophical part from the story. So I'm not talking here about, oh, but is this good for crypto? Is this bad for crypto? Is this nice? Is it going to be manipulated? Blah, blah, blah. I'm not discussing it. That's not the point of my argument. My point is this: if the spot ETFs are approved, is this going to mean crypto price up or crypto price down? That's it. That's my question. In my opinion, again, not financial advice, it's just my opinion, I think the entrance of institutional money will be very bullish for the price. And this can take us really to the so-called super cycle, depending on how much money comes in. Don't forget, the entire crypto market is $1 trillion. I mean, BlackRock is one of the top 3 most powerful companies on the planet. I think between them, State Street and Vanguard, they manage something like, they have participations where their asset values, like if you look at everything combined, is like $66 trillion. It's like more than 2 times the economy of the US. So make no mistake. And BlackRock is going all in. So many people say, oh, Bitcoin is not centralized. No, there's about 5 mining pools. There are about 4 mining hardware companies. And BlackRock is buying a lot of them. I think out of the mining pools, BlackRock already controls 4 out of the 5. So they are going into it in a bit like this. The crypto can have the potential to disrupt entire industries. I don't care if it does. I don't care if it doesn't. This is the perspective, I imagine, of BlackRock. But if it does, I want to be the guy who makes the most money. And if it doesn't, I want to be the guy who loses the least money. You see, that's all they care about. So when people say, oh yeah, but if they come here, they're going to destroy it. I say, why would they destroy something if they can make more money out of it? See what I mean? It makes no sense. It's like, oh, BlackRock is going to enter the real estate market to completely destroy it. Why? It's a bit like, oh yeah, Elon Musk is going to buy Twitter and completely destroy it. Why? Isn't it just much easier to make money out of it? See the point? So I do think the coming of institutional money will be key. And I think what can happen, by the way, what I think is going to happen, this is very important. If a spot ETF is approved, I think we're going to have a big run-up. But the day it launches, so let's say it's approved November 2023, and let's say it's going to launch March 2024, okay? November 2023 to March 2024, I think it's going to be very bullish. But the day in March that it launches, that's going to be a big sell the news event. Remember Coinbase IPO? Same story. Big run up and then big sell down. Same thing. My opinion, of course, I'm not a genius. I just understand markets and I've seen these movies play out many, many times. So I think it will make. I think it will follow this pattern. By the way, guys, I try to make these live streams about half an hour, so I will take a few more questions and then I will be calling it a day. But you can always leave me comments, and I always make videos about whatever comments you may have. So buying Riot and Marathon option with June 2025 expiration date may be something to consider now that BlackRock is purchasing the top two mines. I mean, yeah, they are not just buying the top two, and they're buying stakes in 4 out of 5. So they are really going heavy on crypto. And make no mistake, the purpose of those guys is very simple. If they go to crypto, they go to crypto to make the most money than everybody else. That's it. That's their philosophy. And they will, and because they're a quasi-governmental institution, they pretty much have the okay from one of the most powerful governments on the planet. I actually avoid options, and I still have a bit of stocks, but not so much, because I really think that crypto is the best way for generational wealth. But Matt, if you think that's a very good strategy for you, I wish you the best of luck. I see the point of why you're thinking it. I mean, you do, you make your research and make your decision, man. And I hope you make billions of euros and dollars and yens and Swiss francs and whatever currency you may be using. Do you believe the entry of these big institutions into BTC will change the cycle as you currently know it? When you say super cycle, I don't think I understand what that means. Okay. So, oh my God, you asked me a bit of questions that take a big time, but Arturo, I will answer it for you. So I do think big institutional money coming in will be very important, at least for short-term price appreciation. And in case people are not paying attention, there are companies issuing digital bonds on the blockchain already, with banks issuing those bonds on the blockchain. That means there is a big credibility given to blockchain and crypto. And I think that was this company recently that issued a 5 million euro bond on the Polygon chain. I don't like Polygon that much because they have admin keys, and I don't like anything with admin keys. They can just invalidate your coins at will. I'm not saying they're going to do it, but they can. So I don't like it. But in any case, these things are happening. Now you have companies bringing index funds, ETFs, stocks into the blockchain as well. Now, these are all a bunch of liquidity that comes in. Once they're in the system, the liquidity grows exponentially, which means it can push prices up. So can big institutions change the cycle? Yes. So instead of dropping, so Bitcoin used to drop 85% and Ethereum 95%. Maybe next cycle we drop 50% or 60%. maybe we drop 65, 70%. But then, and here is the key, super cycle means something like this. Instead of repeating the cycles that we're having, because the cycles we've been having, the reason why they are so clear is because institutional money has been out of it for the most part. You have a little bit of participation, but it's been retail investors the most. So they behave as me and you behave, particularly when we don't have experience, which is we see crypto going up, we buy it. It goes to the moon, so we buy it. It keeps going higher, so we buy it, so we get ecstatic, euphoric, anything goes up. And then reality checks in and the whole thing crashes brutally, 90%, 95%, 85%, whatever. And we get depressed and we lose most of our money. Of course, smart people, smart investors. Sold, made a lot of money, sold early, bought early, blah, blah, blah. In the bear market, the smart money is buying all the way. The dumb money don't even want to hear about crypto anymore. Then you have the big bear market, things get destroyed, the good projects stay the same. And they start developing during the bear market. And then you have the recovery year. What is the recovery year? It's the year after the bear market, in which you start to pump, but every pump is followed by a sell-off because people remember what happened the year before. So every time they see a big green candle, they sell it because they don't believe in it. Say, oh, no, I've seen this before, I got tricked, that's it, I'm selling it. Think about Bitcoin. We went from 15K to 30, 32K, but meanwhile, every time we'd go from 50 to 20, we'd sell off. From 20 to 22, we'd sell off. From 25 to 7, we'd sell off. From 32 to 24, sell off. So on and so forth. 2024, so the next year is the beginning of the bull market. You have the Bitcoin halving, a big pump into the halving, sell off in the halving, sideways for 2 or 3 months, and then we start going up. And then bear market is already very far away, so people get excited again, and they go into the euphoria phase, which is, in this case, would be 2025, and then the whole thing crashes again, because people got euphoric and they forgot. A super cycle is, in this phase, after the recovery year into the bull cycle, so much money enters into the system that everything pumps, but pumps dramatically. And here is the key. Every time this cycle repeats, it gets more difficult and returns get worse. Let me explain what I mean. Bitcoin went from less than a penny to about $200, crashed to, I don't remember by heart, but crashed to like $50, then went to 1,300, back to 200 something, 20,000, 3,000, 69,000, and now 15,000. Notice that from 20,000, 2017, to 69,000 is about a 300% pump. Now, a 300% pump is much better than the stock market, but it's no longer the old Bitcoin that used to go up hundreds of times, right? So you see diminishing returns. What can happen in a super cycle is I have 3 strategies for the next cycle. Number 1, I have several videos about this, so I'll just quickly summarize it. Number 1, Bitcoin stops at 95K and everyone gets mad. Base case, Bitcoin behaves a bit like the other cycles. Maybe we go somewhere between 120 to 150,000 Bitcoin. Or super cycle, so much money comes in that Bitcoin goes to 300, 400K, 500K, even more. And if that happens, my friends, then my altcoins explode completely and go up millions of percent. And I'm a very happy man. But the problem is, if that happens, I think next cycle, the opportunity for generation wealth will be almost non-existent. So crypto will start moving closer to the stock market. See what I mean? That is my feeling about how these things can move. So super cycle would be, you would have such a pump and maybe some more of a limited dump. But then the bigger those big moves that you see in crypto, the generational wealth that we used to be created, now becomes very difficult. So when I say super cycle is possible, that's what I mean. Is it guaranteed? Which of the three scenarios will happen? I don't know. It's good that I have a good idea of how are things gonna. I think things are gonna move, but nobody today can tell. Oh, this is gonna happen for sure. If you see somebody telling you this, these are people who are trying to trick you. Okay, they're trying to convince you to join a private group, a Discord, sell you courses, whatever the case may be. But they are not here to help you. Like, make no mistake about it. Yeah, exactly. So what you're seeing is, because if a lot of people think about like this, if a lot of institutional money comes at force at once, etc., who's gonna buy after them? Like, of course, the market then can drop and correct and all of that, but then think, where is the next wave of big institution? If they're already here, who's gonna buy after you? It's a bit like Elon Musk bought Bitcoin. Okay, who's gonna buy after him? I mean, you had Elon Musk bought Bitcoin, Coinbase did the IPO, Michael Saylor has bought Bitcoin on leverage, Three Arrows Capital bought Bitcoin on leverage. Who's left? Nobody. El Salvador already bought. Who's next? There's no one. See what I mean? The big minds have problems and they run over 90% Chinese tech. No, I understand. Actually, I mean, I prefer much more the Ethereum model. I mean, if you ask me, look, the reason why I talk so much about Bitcoin and Ethereum is I don't particularly like Bitcoin. I think it's bad technology. I think it's old technology. I think they were extremely important for the space. Don't get me wrong, but I do see better things out there. And Ethereum has a better model because it's a proof of stake in which you actually don't need to sell your Ethereum to pay for electricity, so you don't need to dump the price. Don't forget, if you have a Bitcoin mining, what's happening? You're running computing, which is very expensive, wastes a lot of electricity. Then at the end, you get a Bitcoin, you need to sell part of it because you need to pay the electrical company. There are better ways to do stuff. The same way you used to have coal, then you moved to oil, then you had natural gas and nuclear, and now you also have renewables. So the point is, you're trying to tell me that things running on coal are better than things running on gas, which is just not the case. That's just my point. Okay. So yeah, I know they do have problems, but I look mostly at these things as okay. There are things that are gonna happen to crypto that I cannot control. Point number one. Point number two, can I benefit from whatever the situation, whatever happens? If I like it, I don't like it, it doesn't really matter. It's how can I benefit from whatever is happening that I cannot control. I mean, it's not up to me. It's not me to decide who comes in, who comes out. There was also something that people forgot. Oh, the SEC. I've mentioned this. For short-term price, yes, the SEC can have an impact. For longer term, no. Innovation just moves someplace else. Just moves to Singapore, Hong Kong, London, Dubai, whatever. They just go someplace else and the US gets left behind. Over the longer term, but in the short term, yes, it has an impact. BTC halving is happening in April 2021. I want to sell 25% of my portfolio so I can re-inject back into the market during the consolidation over summer 2024. Also to maintain 75% in case I'm wrong. Yeah, I mean, Matt, again, you know I cannot give you financial advice. I cannot tell you what to do. I'm not asking for financial. How would you play this strategy? Look, what I'm trying to do, this is what I'm doing. I'm working as much as I can. I'm accumulating as much coins as I can during the recovery years. And that has been my focus. And when I see big sell-offs, I try to accumulate a bit more if my financials allows me to. I mean, what I've seen in the past is this. Run up into the halving, then CNBC starts to get excited. Jim Cramer starts to get excited. But every time you go on Twitter, it's only positive stuff about crypto. You go on YouTube and you have a new crypto channel per day talking about the next 10x coins and 100x coins, etc. See, I started my channel when nobody cared about crypto. And a lot of people were suspicious and things were not so good. And I don't charge anybody for anything. So that is, I think, why my channel actually grows organically, and we only have wonderful people here. We don't have the typical clowns. I would say I see no reason why this time would be different. I would be careful with the timing of the spot ETF being launched, not announced, launched, because I think the best we could have would be launching and halvening almost at the same time. So that way we have a big correction, and after that is nothing but net. But I do think that the date launches, it's going to be a sell the news event. That's my opinion. But again, I want to say something. Who makes it in crypto? Founders of coins and exchanges and holders. Traders get wrecked. So also, I need to be honest with you. I need to tell you the truth. Traders get annihilated. Let me give you this example. Did you see the recent action where Bitcoin went in certain exchanges a bit above 30K, where there was this false ETF news coming out? So do you know what happened? The shorts in the way up got liquidated, got destroyed, because there was this huge spike from like 26.8 to 31K. So the shorts got all annihilated. Then when the news came out that the ETF announcement was false, it sold down and it liquidated the longs. So people that were buying and selling on leverage, both sides of the trade, short and long, got annihilated. This is what happens to traders in crypto. And I've seen this movie play out so many times that, I mean, in my opinion, is people are trying to pick pennies in front of freight trains. Now, it's up to people to decide, do I want to play this game where a lot of us lose and a few of us win, or not? I cannot answer that question. That's up to you. It's as simple as that. Now, I would like to mention something. Everybody knows by now, I think, what I believe to be my retirement bags will be the Pulse Chain ecosystem with Richard Hart. They have been targeted by the SEC, but I do see that his personality is coming back live once again. Pulse Chain, for those who don't know, is a cheaper, faster version of Ethereum. PulseX is a better version of Uniswap. Then you have X, Hedron, and Icosa, which are the derivatives. And we've seen a very material pump over the last couple of weeks, and I have seen, and I am starting to be confident to say that we've probably seen the bottom in that market. Now, am I excited about this pump? Am I gonna throw parties? No, I mentioned this before. My target, my goal is 2025. Accumulate as much as I can 2023, 2022, 2023, and when there's big sell-offs in 2024, because no market goes like this or like this, there are points in between, I will try to accumulate. By 2025, when I hear things like crypto will never go down and this time is different, and maybe Mexico uses Bitcoin as a reserve currency, or maybe another country in Africa or Nigeria uses Bitcoin as a reserve currency, and this is it, and Bitcoin will overtake the world, and crypto is gonna outperform everything. When I start to hear those things, then I would start selling my position. That is my strategy. That is my goal. And this is where I think, I will have the best chances to have to hopefully broadcast to the world my journey into financial independence and to generational wealth. This is why I created the channel, to broadcast my journey. It's not the point. I'm not a leader of anything. I'm not here to have a bunch of people copying me and doing everything that I do. No, that's not the point. If you guys have been following me for a while, you know that. And look, guys, I'll take these final 3 questions and then I will be leaving you guys, and tomorrow I will pump other videos. And now I'm a bit more stable with my traveling, and hopefully I will be doing live streams back once a week. So let's go. By the way, guys, don't forget, like and subscribe. That is the only gift that I take here. It's the only thing that I ask, okay? And it costs you $0, basically. When housing market crash, when nobody's expecting it. So whenever you see people super convinced that real estate has never been stronger, real estate is the lifeblood of the economy, nothing's gonna go wrong on real estate, that's the time that it's about to crash. And everybody's talking about commercial real estate. It's gonna be the disaster of the world. Again, what did I mention before this big sell-off? Look at things nobody's talking about. China, and more importantly, government debt. The safe assets that everybody thinks are so safe, if those things start to sell off, by the way, TLT, the bond market was actually close to 110, something I said. Look at those assets. What happened? Bonds went from 110 to 85 or so, and then that shaked all the stocks. So when housing market crash, I don't think housing market is crashing. And actually, if you think about it, it's not so hard to think. People bought houses in 2020, 2021 with mortgages of 30 years at below 3%. Who's going to sell their house? There's no supply in the market. As long as this dynamic stays in place and the default rate doesn't raise too much, it's very hard to have a house market crash. And when you start hearing things like real estate is the lifeblood of the economy, you cannot go wrong buying real estate. Real estate is the way you go rich. When you start listening to this everywhere, YouTube, CNBC, Bloomberg, you name it, that's the time to be concerned. Just like with the recession. When everybody was telling you recession in 2023, don't be concerned. There's not going to be a recession. When the Fed, Goldman Sachs, and all these banks are now saying that we're not going to have a recession, no way, no how, that's the time to be concerned. Then, what is your thoughts on Chainlink? Relationship with Swift and big banks. I don't see altcoin with better risk to reward than Link. That's just my opinion. I do like Chainlink, by the way. I've mentioned that a few times. I do think what I'm struggling with here is I have my core positions, but there's going to be a new narrative this cycle. So last cycle was layer ones. Every layer one did well. Doesn't matter. Ghost chain, no users, who cares? Token went up. So layer ones did very well. Meaning copies of Ethereum, etc. Then NFTs did very well, and dog coins did very well. What are going to be the narratives for this next cycle? I don't know. It's too soon to tell. Maybe it's going to be AI stocks. Maybe it's going to be interchain operability, in which Chainlink, I think, will do very well. Maybe it's going to be because so many centralized exchanges gave problems and went bankrupt, maybe decentralized exchanges like PulseX, like PancakeSwap will be the next narrative. Who knows? Who knows? At this stage, it's difficult to say. But I do think, look, Chainlink is not a scam. Chainlink has a strong community. Chainlink has good applicability. Chainlink, I think, will play a major role in developing the ability to intertwine different chains. But will it be the winner? Difficult to say. But I do like the project. There's no question about it. Dude, seriously, I appreciate the way you break down information. I was looking forward to your uploads, hoping to make it big this bull market as well. Oh, thank you, Arturo. It's very nice of you. I really appreciate the nice comment. Karim, yeah, everything is very good. Thank you, man. I haven't seen you for a while. Okay, guys, as I mentioned, I was targeting half an hour. We are almost at an hour here, but I did see a lot of engagement from you guys, so I really appreciate it. As I mentioned, guys, if you could drop that like and subscribe. If you think that I have good info, consider sharing with your friends, family, colleagues, whatever. And yeah, guys, if you watch this stream a bit later and you didn't have the opportunity to ask a few questions, just drop it in the comment section. I really try. First of all, I answer all the comments, and I really try. If you have a bigger comment that you like me to address in the video, I always try to make the effort and do it. So please, guys, feel free to communicate to me that way. And by the way, if I told you that I'm going to make a video and you don't see me doing it, that means I may have forgotten. So just chase me, just arrest me, tell me where is my effing video, I really appreciate you guys. And oh, thanks, man. Yeah, no, I'm a genuine guy, right? It's very easy to see. You want to see how? I don't charge you for anything. Have you heard me talking about a private group, private Discord? I made a list I make few predictions. I make 7-8 predictions for 6-7 months. That's it. I think out of my 8 predictions, 7 happened almost to the dollar. And I don't charge anything for it. I could use that little trick and then say, hey guys, by the way, if you wanted the next tips, join my private group, join my Discord, join whatever. But I don't do it because the point is I don't need it. I actually think I'm going to succeed the way that I'm going to succeed. And to me, YouTube is really a hobby. And I see so much dishonesty and so much scamming going around the YouTube finance space that I really wanted to create this channel, trying to be, a force to counter all of that crap. Although, my channel is still growing. I don't have 1 million followers or anything like that, but it's growing very well. And I think we're developing here a very good community. It's very respectful. You guys have excellent questions. There's no shouting at other people's here like you see in other chats. So I really appreciate all of you guys being here. It's really a pleasure to be here. And never forget, if you do enjoy the content, drop that like and subscribe. That's my biggest grift, and let's catch up over the next few weeks. It's interesting times. We're still on target, so let's effing go.